What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Tesla stock, ticker symbol TSLA, on a variety of time frames in anticipation of the next trading day, Wednesday, March 6th. Alright guys, Tesla stock here today down $7.40 a share in regular trading hours. That's 3.93%, essentially flat, up about 16% after hours here. So we are getting a slight downside continuation from, of course, yesterday's news that led to that larger sell-off yesterday. But we now find ourselves in a really interesting place on the chart historically. So let's take a look at this. Let's start first with our daily ritual, the volume profile analysis here on the 5-minute chart. So you guys know what I'm looking for, if you've been watching for any period of time. By the way, if you're new here, please subscribe to the channel. I greatly appreciate it. And I will do my best to provide you with free value every single day. But what we're looking for here is big changes in volume, right? Kind of some pops in the volume profile that correlate with really obvious moves in the price of the stock. But this is the kicker, it has to be out of context for what's expected during that time of the day. So if we look at the 5-minute chart here on Tesla today, what are the obvious moves? Well, I'm looking at that move there, pretty clearly. And then I suppose I'm also looking at this intraday recovery, and then these two, kind of the dump and recovery into the close. Those four are the ones that I want to take note of once we look at the volume. And, immediately looking at these two on the end, there's just nothing there. There's no substantial volume that's out of the ordinary at all, so I have to remove those. This upside move, honestly, we're really not seeing any tremendous volume there either. The only thing that I'm really seeing here is we did see a little bit of increased volume during that downside move. Now, honestly, for this to be more definitive as a bearish win during that time of day, and I'll explain what I mean in a second, I would have preferred to see, at least if I'm a bear, I would have preferred to see these three candles surrounding that larger candle, like kind of meeting up there. That would have been much more obvious. Whereas you kind of just have that one higher candle, and then these three are less definitive, but they're still, higher than the surrounding volume bars, of course. But looking at this, I kind of have to give, the bears a little bit of credit and say, okay, in that moment, a larger sample size of the market agreed that Tesla belonged lower. Okay, granted, we did see a bit of a recovery throughout the remainder of the day, but we didn't really recover the entirety of that move, about half into the close. So, listen, is it the craziest volume profile I've ever seen? Not even close, but an interesting one to take a look at nonetheless. One factor of many, so let's move on here and take a look at the 30-minute chart, looking at the most contextual, psychological, and self-fulfilling prophecy levels we can possibly pull out of the market to watch tomorrow. Starting here again on the 30-minute chart with the, again, self-fulfilling prophecy, most heavily used indicators we can possibly utilize. The 50-period moving average, that white line, and the 200-period. The 200 is not really immediately relevant, however, that 50-period is, and if you watched last night's video, we were taking a look at this stock heading into today. What we were kind of looking at was, I would love to have seen, from a bullish perspective, a reclaim of at least one of these levels. The 50 period was the more probable one, of course, since it is lower. And we weren't quite able to pull that off here today. So heading into tomorrow, Wednesday, what I would love to see here on the 30-minute chart in particular, from a bullish perspective, would be a reclaim of that 50 period moving average, which is currently at 184. It's not a tremendous move away. That's currently approximately a 1.66, 1.7% move to the upside. I would love to see a reclaim, back test, and then high volume. As much volume as possible. Pull away to the upside, right? Because that would force that 50-period moving average here on the 30-minute to start curling back up and create that potential psychological barrier between the stock and this 177.50 to 180 range that we have talked so much about. If I'm a bear, any retest of that 50 period, just see a hard high volume fade away to the downside back toward this region. And ideally, you bears would want to see this 50 period continuing to the downside with the stock. Okay, to have that lowering, descending psychological potential barrier. Let's move on here now to the 4-hour chart and take a look. You can see here that the 4-hour, after this breakdown that we had on Monday here, it's not quite as relevant because anything that is specific to the 4 hour, like that 50 period, the nearest one, is right around 195, 196. Okay, and the stock is currently at about 180, 181. But, I have to pay attention to the 4 hour chart because it will be relevant at some point. So if I'm a bull here, really all I'm worried about is I'd prefer to see this 50 period flattening out, not getting lower at a huge, pace. And if I'm a bear, of course, I want this 50 period curling downside as quickly as possible, ideally getting below 195, if not, 190 as soon as possible. But understanding that these things take a little more time to move on the 4 hour chart. Okay, let's now take a look at what is going to be the most contextual chart of all, and the most important chart of all right now, especially the daily. Everyone's watching the daily, and we currently find ourselves, listen, we used to talk about this 177.50, 180 range a lot when it was more in play, and here we are again. It is once again in play, okay? This has been historically a pretty considerable level. Going back, basically all the way to late 2022, if not further. We'd have to look back further, but that's where I have it drawn from. So this has been respected on both sides of the ball, most recently as a support region. And if I'm a bull looking at this daily chart, I want to keep it that, right? I want to keep this range. And again, it's 177.50-ish up to about 180. It's really a range. It's never going to be an exact penny, especially on a stock that's priced like Tesla in the hundreds here. I want to keep that range a support level. 180 is kind of the beginning of that range to the downside. 177.50 is kind of that backstop where I'd prefer to hold ideally. And any test of that entire range, but especially 177.50 if I'm a bull, of course, there's some leeway there. It can dip to 177.30, whatever. Just that range. I want to see it bounce hard out of that range and get above 180 tomorrow and hold there on high volume. Any volume except for below average volume, I'm cool with. Okay, bears. You kind of have your sights set on one thing. Not really the range, but bears would love to see a downside break of 177.50, which is why I think it's so important for bulls to hold 177.50, at least important in the very short term. Of course, a longer term outlook of Tesla is a little bit of a different story. It's a lot of a different story, actually. We know what this thing can do in terms of volatility given a long enough time horizon. But bears, in the near term, what's your ideal goal, really? To discourage as many bulls as possible. Same thing with you, bulls, right? But bears, how do you discourage bulls in the most effective way possible in the very short term? I would argue a crack downside of 177.50 and a hold down there would probably do a little bit of that. Bulls, how would you discourage the most amount of bears possible in the shortest time frame possible? Hold 180 and bounce hard on high volume away from there, heading back up toward, not immediately, but heading back up toward that $200 region. I think that would be a pretty effective way to discourage some bears. Okay. Implied volatility, just really quick, is upside the last couple of days. Just understand that the higher that goes, the higher the potential for, the potential risk, I should say, for IV crush. Okay. If this goes higher and you, are buying contracts, if that IV comes back down toward equilibrium, that negatively impacts your contracts, at least through one factor, which is the Greek vega. Okay, let's take a look at what was the bias from the options traders here today. This is only from today, how traders are positioning themselves heading into tomorrow, Wednesday. We have 2.24 million total contracts traded. That's a great sample size. 1.19 million calls, 1.04 million puts. So we are seeing, it's not overwhelming by any means, but we are seeing a slight call side bias on the overall call put ratio. But if we break this down by time frame, it's actually pretty interesting. We have two things that are primarily the most interesting here. This is a little bit out of the ordinary. The 81 to 100 delta range, those are those deep in the money on average longer term sentiment. We're actually seeing 11,000 calls and 109,000 puts. It's very often, or very common, I should say, to see this longer term, deep in the money sentiment leaning call side. So we did get a lot of puts in that deep in the money range here today. But what I'm more interested in, really, because this video is primarily more geared toward Wednesday's trading day, a short-term analysis here, is that short-term speculator range, the 0 to 20 delta range, those far out of the money, on average, short-dated expiration, gambly style, dare I say, calls and puts. In that range, we're seeing 585,000 calls and 300,000 puts. A pretty heavy call side bias in that range. If you got value out of this video, please subscribe to the channel. I'll do my best to continue to provide value here on Tesla every single day. I appreciate you, and I'll see you tomorrow.